new essential provision in the AMLA, okay, which is provided under the policy document issued by the Bank Negara. As we have under the training last year, around in November 2019, the time when the briefing was being conducted, this new policy has not been issued yet. And this new policy document was issued with effective from the 1st January 2020. Next slide. As you can see, on your left is the previous policy document. On your right is the new one issued by the Bank Negara, effective on the 1st January 2020. If you can see, there are some wording there, which is being added now in the new policy document, which is the targeted financial sanction. Okay, next. As stated in the para 3.3, as this is the existing provision. All lawyers are being governed under this policy document. And if any of the activities being carried out by the law firm or the lawyer in charge, which involve these 5 categories, okay, this new policy will take effect. Okay, i.e., number 1, when the activity is regarding buying and selling of immovable property, managing of clients' money, securities of other property, managing of accounts, including saving and securities account, organizing of contribution for the creation, operation or management of the companies, and the last one, creating, operating or managing of legal entities or arrangement, and buying and selling of business entities. These 5 regulated activities have not been revised, it still remain the same. Next. And with this new policy come into the picture, which is effective from 1st January 2020, the Bank Negara has revised the whole structure, which they remain most of the existing one, but with some enhancement and improvement on more stricter requirement. And you can see from this policy document, which I will touch later, whereby there are these 3 categories of entity which is actually being exempted in the previous policy, i.e. the government-linked companies, state-owned corporation, and the registered person pursuant to the Financial Services Act. These 3 categories in the earlier policy has been exempted for the lawyers to conduct the verification of their directors and the certificate of incorporation. But with this current new policy being issued, this has been omitted. It means that there's a requirement that these 3 entities need to be done the normal due diligence requirement. But the Bank Negara have given us the 12 months grace period for us to comply with this requirement if any of our businesses involve these 3 categories. Next. Under this new policy, there are a few definitions being introduced, whereby we can see that the intention of Bank Negara, whereby they include such a definition, will suggest that the Bank Negara impose a duty on the part of the lawyers to comply or even to carry out certain stricter requirements. For example, I will pick up a few new definition or revised definition which being provided under this new policy. The first one, they define the word accurate. They now refers to this accurate to information that has been verified for accuracy. The rationale of the Bank Negara for imposing this new definition is to require the lawyer in charge, when doing the verification, they must make sure the information being provided by the customer or the client is actually being verified by our side. and not solely based on what info being given by the customer. For example, I think previously when the bank negara doing the site examination in our firm, the officer has pointed out that we have not gather any information from the client where their funds come from. For example, in the cash transaction. With this new definition come into picture, the bank negara rationale now is to impose a further duty on the lawyers to actually to verify such accuracy. It means we cannot just merely depend on the information provided by the client. I give you an instance, is such as when the client told us that the money is come from his business. Then further verification need to be done on what type of business that he's carried out. And then whether that business has actually generate any income for him to conduct the so-called cash transaction. The next definition is the cash transaction being referred by the bank negara now, which they clearly define what is cash transaction now. It refers to a transaction where cash or cash equivalent is paid by or behalf of a customer in the form of banknotes and coins to the reporting institution or into a bank account of the reporting institution. Category B, bearer negotiable instrument, including traveler's check, voucher, and others, or precious metals and or stones. The most important thing is the category A and B, which normally involve how the client pay for in consideration of the transaction being carried out by them. The next slide. The next definition that is relevant to us, or I think that after I filter, that we need to take into consideration, is that define the close associate of PEP. Previously, during the training last year, I think we have a touch on this political exposed person, which is one of the so-called targeted person that we need to do due diligence. Now, they have expand the range of this due diligence to the close associate of PAP, which they refer and or extend to any family members, such as relative or financially dependent individual, business partners or associate of the PEP, prominent members of the same organization as the PEP, or any other individuals working closely with the PEP or his close friends. Next. They also require the law firm to also doing duty on the family member of the PEP now, which is include parent, sibling, spouse, child, or spouse parents for both biological or non-biological relationship. This indirectly impose a more burdensome on our part to actually identify all the close related members and also the family members of the PEP. If our transaction involve those political exposed person. The next definition, which is being introduced under this new policy, is this so-called targeted financial sanctions. It refers to an asset freezing and prohibition to prevent funds or other assets from being made available directly or indirectly for the benefit of person designated or entities specified by the relevant United Nations, UNSC Sanctions Committee, or by the Ministers of Home Affairs. For our firm, I think this category is a very, very rare, but it, however, being introduced under this new policy. The next. Under this policy, para 10.21, the law firm or the reporting institution are required to take appropriate steps to identify, to assess, and understand their money laundering or the terrorist financing risk at the institutional level in relation to their customers, countries, or geographical areas, products, services, transactions, or delivery channels, and other relevant risk factors. I will further touch on it when come to the next few slides. Next. Okay. Now the Bank Negara has actually emphasized, okay, although previously there are some elements are the same, whereby they have given us the so-called risk-based approach, so-called RBA, which have consists of two different assessments. One is called institutional risk assessment, so-called IRA, which is more towards our firm own risk assessment on our client based on our institutional level assessment. It's not on the customer, but it's on our own firm risk assessment. As you can see here, a reporting institution is expected to perform an assessment on the degree of the money laundering or terrorism financing risk that the reporting institution business is exposed. It means more regarding to our firm, and determine its risk appetite level. To this end, a reporting institution is expected to formulate specific parameters of the money laundering or the terrorist financing risk factors considered. Next, the law firm need to formulate and implement business risk management and mitigation control measures. This is more on the institutional risk assessment element. The next slide. And the next element is the customer risk profiling, which we have been doing during the last site examination, whereby this customer risk profiling is to determine the risk parameters for customers risk profiling, whereby a reporting institution is expected to identify specific money laundering or terrorism financing risk factors and parameters for customers profiling. Wherever relevant, the reporting institution may adopt similar parameters that have been used for the assessment of the risk factors considered under the IRA. So you can see, for this customer risk profiling, it may be the same risk assessment on the institutional risk assessment, which need to be done on our firm itself, on the exposure of the risk on our firm. Next slide. There's a specific Appendix 8 now contained in this new policy, which they give some useful guidance notes on how should we conduct the risk profiling on customer. As you can see, based on the customer due diligence information obtained at point of onboarding new customer or ongoing customer due diligence information obtained from existing customer, as the case may be, a reporting institution is expected to determine the risk profile of each customer, i.e. high, medium, or low, by applying the risk parameters determined above in order to determine the appropriate level of CDD. As explained during last year, after the standard CDD be conducted, whenever there's the necessary, we need to do the enhanced CDD based on the each circumstances of the case. The Bank Negara also has requested the reporting institution to apply the necessary risk management and mitigation policy, control, and procedures that are commensurate with the risk profile of each customer, and to effectively manage and mitigate the risk identified. For example, customers assessed as having higher risk should be subject to enhanced CDD procedure, and senior management approval should be obtained before offering or continuing to transact or provide professional services, and the customer should be subject to more frequent and intense ongoing CDD procedures. Next. As mentioned earlier, this risk-based approach is expected to be tailored to the nature, skill, and complexity of our business, size, and structure and activities. And this risk-based approach had to be adopted in our policy and procedures. I think this we have incorporated in our existing policy, which of course, after the implementation of this new policy, more stringent requirement or the risk assessment basic parameters need to be introduced. And we will issue out the new guideline and also the SOP for the lawyers to carry out the new due diligence on all our customers from O to O. Next slide. The two assessment element, i.e. the institutional risk assessment and also the customer risk profiling, actually complement each other. And the reporting institution is expected to determine the reasonable risk factors and parameters for each IRA and the CRP. And over a period of time, this data from the CRP will be used as a parameter in assessing the IRA, i.e. our firm's exposure risk. Next. And there's this requirement to assign money laundering or terrorist financing risk rating on each transaction being conducted by our firm. Previously, in our SOP, there is no such risk rating. That's why the bank negara have raised these lapses for us to address in the next SOP, which has to be furnished to them for their review. Next. The other paragraph in the policy document that is relevant to us, which I have filtered and take out, is on para 11.2, whereby the policies, procedures, and control need to be incorporated in our documents, our policy, our procedure, and controls. And all any changes to this policy need to be updated to bank negara and also to our employees. Next. And in conducting the customer due diligence, we are required to comply now with the requirement on the targeted financial sanction, which has been introduced in this new policy. The first one is on terrorism financing under paragraph 23. And the next new area is the proliferation financing of weapons of mass destruction and other UN sanctions under paragraph 24. Of course, these two categories are actually quite rare, happen in our transaction, happen in our firm. But nevertheless, these two requirements need to be enhanced and to update from time to time, as this sanction list will be keep on updating in their website. Next. For the standard customer due diligence measures, bank negara has actually laid down a very good guidance in their appendix and in their new provision, whereby it's stated here, in conducting the customer due diligence, lawyer is required to identify an individual customer and beneficial owner by obtaining at least the following information. This is the basic that we need to obtain: the full name, the IC, and please remember, we are not only obliged to take the IC of the customer, but we are also required to take the IC of the beneficial owner behind the transaction. The residential and mailing address, the date of birth, nationality, occupation, name of employer or nature of self-employment or nature of business, their contact number, and the purpose of transaction. And we are required to verify the identity of the customer and the beneficial owner. Next. And for legal person, or you can refer it as something like a corporation, company, lawyers are required to understand the nature of the customer's business, its ownership and control structure. In this part, I think the Bank Negara has also raised this during the site examination, which we are lack in giving the so-called information, and also lack due diligence being conducted on the ownership and the control structure of this legal person. To be specific, the reporting institution are required to identify the customer and verify its identity through the following information: the name, the legal form, and the proof of existence, which we normally will obtain the certificate of incorporation, the constitution, or partnership agreement, or any other reliable reference to verify the identity of the customer. The powers that regulate and bind the customer, such as director resolution, as well as the name of the relevant person having a senior management position, the address of the registered office, and if different, the principal place of business. We are also required to identify and verify the person authorized to represent the company or business, either by means of a letter of authority or director's resolution when dealing with such person. Next. We are also required to identify and take reasonable measures for the identity of the beneficial owner according to the following sequence: the identity of the natural person who ultimately has a controlling ownership interest in a legal person. At minimum, this includes identifying the directors, shareholders with equity interests of more than 25% or partners. To the extent that there is a doubt to whether the person with the controlling ownership interest is the beneficial owner or not, or where no natural person control through the ownership interest, the identity of the natural person exercising control of the legal person through other means. And when no natural person is identified by either way of the above, the identity of the relevant natural person who hold the position of the senior management. Next. And whenever there is a doubt to the identity of the person, we are required to conduct basic search or inquiry on the background of such person to ensure that the person has not been not in the process of being dissolved or liquidated or is a bankrupt, and verify the authenticity of the information provided by such person with the Companies Commission of Malaysia or Labuan Financial Service Authority or any other relevant authority. As I mentioned earlier, there are a few categories that we are exempted from obtaining this certificate of incorporation, which fall under the following categories: the public listed company, the foreign public listed companies. Next. The foreign financial institution, an authorized person under the Financial Service Act and the Islamic Financial Service Act, person licensed or registered under the Capital Market and Service Act, licensed entity under the Labuan Financial Services and Securities Act 2010, and the Labuan Islamic Financial Services and Securities Act 2010, the prescribed institution under the Development Financial Institution Act 2002, or licensed entities under the Money Services Business Act 2012. As I mentioned earlier, the three categories of the government-linked company has now been deleted from this list, which suggests that we now have to obtain the required information, even if we are dealing with this government-linked company. Next. Under the previous policy, Bank Negara actually recognized non-face-to-face business relationship. However, in this new policy, they have made it a stricter requirement or stricter and so-called stricter policy that we need to comply for if we are conducting a non-face-to-face business relation. The reporting institution shall obtain approval from their board prior to the implementation of this non-face-to-face business relationship. And reporting institution must comply with any additional measures imposed on the implementation of this as deemed necessary by the competent authority. Reporting institutions are required to be vigilant in establishing and conducting business relationship through electronic means, which includes mobile channel and online channel. The board shall set and ensure the effective implementation of this policy regarding to this non-face-to-face business relationship. Next. The reporting institution must also ensure and demonstrate on the continuing appropriate measure to identify and verify the customer identity as effective as that of face-to-face customer and implement monitoring and reporting mechanism to identify the potential money laundering or the terrorist financing activities. The reporting institution shall take measures to identify and verify the customer identity through any of the following method: establishing independent contact with the customer, verifying the customer information against reliable and independent sources to confirm the customer identity, and identifying any known or suspected risks associated with the customer. Requesting, citing, and maintaining records of additional documents required to perform face-to-face customer verification. To ensure the system and technologies developed and used for this purpose have the capabilities to support this compliance program. Next. As has been briefed earlier in the last year training, lawyers are required to conduct due diligence if the activities are under the 5 regulated activities that I mentioned just now. And now they have imposed an enhanced CDD on not only on the transaction that we feel that we need to do, but also whenever there's a nominee services involved in the transacted activities. Next. Okay, next come to this the 2 gray area that we are so-called engaging in our firm, the maintenance of the sanction list. There are 2. First list is under the UNSCR list, okay, which our admin will normally do the name match procedure under their UN website. Next. There's another list under the domestic list, whereby this need to be complied as well. And the list is provided under the Gazette, and we are to refer to domestic list published in this website so that the sanction procedure can be conducted before any transaction being carried out. Next. These are the other requirements that the lawyers are to ensure for all the compliance procedure, and the information contained are all easily accessible by all our staff, our branch. Next. And what we should do if, let's say, the transaction are so-called suspicious or being sanctioned under the list, we are required to actually freeze block or reject all these customer or their related parties. Next. However, there are some allowable transactions that can be carried out under these two categories with the written authorization from the Minister of Home Affairs. Next. As I mentioned earlier, we have a reporting duty being imposed on us if there is any positive name being matched after we do the name match procedure against the sanction list. And there are some forms that we need to attach whenever this event occurs. Next. Next. These are the few forms that we need to fill up. Next. And we are also being required to do periodic reporting on all these positive name match. Next. Based on the forms being given. Next. Next. And the other duty that we are supposed to do is on the reporting of any suspicious transaction, which is normally carried out by, is already in place, whereby we have to do the report to the bank negara of any suspicious transaction on our customer. This includes any transaction that involve the targeted financial sanctions on the terrorism financing. Next. As I mentioned in the earlier, the latest section that being imposed by the bank negara is on this proliferation financing, which is quite similar to just now the terrorist financing. So I will just roughly go through, whereby there are few others sanction lists being provided, but this time is by the strategic trade controller under the Ministry of International Trade and Industry, whereby they have to issue some directive and some regulation, whereby the lawyers are required to comply to counter all this proliferation financing. Next. The next few slides are more relevant to us. If you all have gone through the policy document that I emailed to you, I think December 2019. If you have gone through, you will notice that there are a few attachments behind, whereby the bank negara now has given us so-called give us a more detailed and also information on how we should conduct the due diligence. As you can see, we have a lot of appendix there. These are the appendix that are more relevant to us. Okay, the customer due diligence form, which we already have, but these are more so-called detailed, which we need to so-called improve based on this appendix being given. Next. Appendix 15 is a more practical for all lawyers, whereby the bank negara has identified two types of red flags. One is under the generic red flags, and the other one is under the specific red flags. I will go through the generic red flag first. Generic red flags, they have identified 5 categories. The red flags involving customers who are individual. Customer refuse to provide information required by the reporting institution, attempts to minimize the level of information provided, or provide information that is misleading or difficult to verify. This is considered red flag for bank negara, and there are a few other red flags that is under category A. Clients who avoid personal contact without logical explanation. Financial activities and transactions of the customer are inconsistent with the customer profile. Unexplained inconsistency arising from the process of identifying or verifying the customer. Customer insists on the use of an intermediary, either professional or informal, without logical justification. Next. Customer who has previously been convicted for any serious crime. Customer who is under investigation or has known connection with criminals. Customers uses multiple bank accounts from domestic or foreign jurisdiction to complete a transaction without logical explanation, which is quite happen nowadays. And I think our firm has also encountered few transactions with this kind of mode. Customer provides falsified records or counterfeit documentation. Customer conduct large or frequent transactions using foreign currency without any economic rationale. Customer is unusually concerned and or make inquiries about the AMLA requirement and internal compliance procedures of control. Next. Category B involve customers who are legal person or legal arrangement. These are the red flags identified by the bank negara, which we need to take note. Legal person which demonstrate a long period of inactivity following incorporation, followed by a sudden and unexplained increase in activities, such as a shelf company suddenly being used to carry out or to conduct any transaction. Legal person which is registered under a name that indicates that the company perform activities or services that it does not provide without good reason. Legal person or legal arrangement which is registered under a name that appears to mimic the name of other companies, particularly high-profile multinational corporation, without good reason. Legal person or legal arrangement which is registered at an address that does not match the profile of the company without good reason. Legal person or legal arrangement which is registered at an address that is also listed for numerous other companies or legal arrangement, indicating the use of a mailbox service without good reason. Next. Where the director of the controlling shareholders cannot be located or contacted. Where the director of the controlling shareholders do not appear to have an active role in the company without logical explanation. Where the director, controlling shareholders and or beneficial owners are listed against accounts of other legal person or arrangement, indicating the use of professional nominees. Legal arrangement or trust which declared an unusually large number of beneficiaries or controlling interests. Legal person, legal arrangement or trust which authorized numerous signatories without logical explanation or business justification. Legal person or legal arrangement which is incorporated, formed in a jurisdiction that is considered to pose high money laundering or terrorism financing risk. Next. Legal person which conducts financial activities and transactions inconsistent with its corporate profile. Legal person which involve multiple shareholders who each hold an ownership interest just below the identification of beneficial ownership threshold. Legal person which has indication of being used as a shell company, i.e. use of informal nominees, no real business activities undertaken, and does not have any physical presence. Media or other reliable sources suggest that the customer may be linked to criminal activities. The last red flag here indicate that there are more duties for a law firm which we need to do to actually investigate more on this customer. Next. Category C under the generic red flags are involving the transaction itself. If the transaction conducted are questionable or generate doubts that cannot be sufficiently explained by the client, this always happens. Transactions involve the use of multiple large cash payment without logical explanation. Customer regularly conducts transactions with international companies without sufficient corporate or trade justification. frequent and cumulatively large transaction without any apparent or visible economic or lawful purpose, payments received for products, services from a third party who is not the owner of the funds without any apparent reasons, transactions that require the use of complex and opaque legal entities or legal arrangement without logical explanation. Next. Transaction or instruction involve unnecessary complexity or do not constitute the most logical, convenient, and secure way to do business. High volume of transaction within short period of time without economic purpose or commercial justification. Unnecessary routing of funds or payment from to or through third-party account without logical explanation. Transaction conducted via multiple payments from the same or different account, mode of payment, which are broken down into smaller amount without logical explanation. Transactions which are conducted hastily or without due consideration a person who normally give to such transactions. Next. Category D, the red flags involving geographical location. If the large number of incoming or outgoing fund transfer take place for no logical business or other economic purpose to or from a location of the money laundering or terrorism concern, the legal person or legal arrangement are incorporated form in a jurisdiction that has money laundering or terrorism financing concern. Customer has unexplained geographic distance from the reporting institution. Next. The last generic red flag under category E is involving delivery channel, i.e. the use of a third party to avoid personal contact without logical explanation. For example, a transaction, although it's under the name of A, but has been dealing with C all the while. This raises a red flag on such transaction. Next. And there are these specific red flags identified by the bank negara, specifically for lawyers and accountants, okay, which is listed down here. The structuring a down payment or escrow payment in order to conceal the true source of the fund used or split transfer without the logical explanation. The transaction aborted after funds are received in client's account, where subsequently client requests for the deposited funds to be sent to a third party and avoids personal contact without logical explanation. Use of multiple accounts to collect and then funds to a small number of foreign beneficiaries situated in location of money laundering or terrorism financing concern. Receive large sum of capital funding quickly following incorporation or formation, which is spent or transferred elsewhere in a short period of time without commercial justification. Client has multiple shareholders who each hold an ownership interest just below the identification of beneficial ownership threshold. Next. Frequent payments to foreign professional intermediaries without apparent economic or logical reason. Transaction of parties that are connected without an apparent business rationale. Business transaction that involve family members of one or more of the parties without a legitimate business rationale. Transactions executed from a business account but appears to fund personal purchase, including the purchase of assets or recreational activities that are inconsistent with the company's profile. Transaction executed from a business account and involve a large sum of cash, either as a deposit or withdrawal, which is inconsistent with the company profile. Next. There are a few additional red flags identified by the bank negara also, specifically for lawyers, which is listed here. Transfer of real estate between parties in an unusually short time period with no logical explanation. Payment of deposit via multiple transactions below cash threshold reporting into the firm's client's account. Client offer to pay extraordinary fees for services that would not warrant such a premium with no logical explanation. Funds deposited into the firm's client's account which do not match with the client's profile. Purchase of real estate property without end financing and logical explanation. Depositing payment into the firm client account from various locations without logical explanation. Next. So, as I mentioned just now, these are the guidelines and the guidance notes that have been issued by Bank Negara just to help law firm to have a smoother and also a more detailed assessment based on the transaction that we are conducting, and also provide us some useful tools for us to really comply with their requirement. The sharing just now, I think some of it has been is just a repeating of the earlier policy document, which of course now they have put more focus and also emphasize on those special red flags area. And feel free to spend some time to read through this new policy, which from time to time, I think we will be encountering such instances. Any question from the floor? I believe it's very DAO sharing because of the so complex structure being introduced by the Bank Negara.
No question.